Tesla and cheap. Those two words are rarely spoken together. But all this has changed. And the surprising thing is, no one's realizing this sudden development. 2023 provides a once-in-a-generation opportunity for investors to build their wealth. A surprising development has taken place, and it's time to take advantage. Elon Musk said that Tesla plans to share details on its next-generation vehicle at its Investor Day on March 1st. Tesla has the largest production capacity, industry-leading margins, leading global market share, competitively priced cars, and strong consumer demand. Therefore, the company has a wide moat, which, given current industry dynamics, appears difficult to surmount. Tesla's recent financial outperformance has increased our confidence in the company's long-term prospects. We reiterate our buy rating and first phase price target of $802 per share derived using a 10-year discounted cash flow model. Now, that anticipates that the number of Teslas produced every year will expand by around 40%. Recently announced price cuts are very competitive and set Tesla up to benefit, as the company's margins are considerably higher than that of its peer groups. Specifically, Tesla's gross profit per car was $15,563, while that of GM was $9,969, Bid Company Limited was $5,456, and Ford's was $3,115. During the same period, Tesla's net profit per car was $9,554 compared to GM's $2,150, Bid's $1,575, and Ford's $927. Given their margin profile, it'll be challenging for the competition to reduce prices on their EVs. Tesla has delivered a knockout blow to its competitors by reducing their car prices. Watch completely to understand my thesis as to why I believe buying Tesla now is a once-in-a-decade opportunity. Also, by the way, don't forget to press the like and subscribe buttons to receive instant alerts. Also, check our important announcement out at the end of this video on receiving timely buying-selling alerts. Tesla stock has been on a wild roller coaster ride in recent months. There was a long ride up for the company's stock from October 2013 to early November of 2021, when it sold near 397. Then the Tesla price topped near 414, and then the rest is history. Tesla stock has been badly affected by market turmoil. Currently, the share price is down by roughly 60%, and it's approaching $170. The stock experienced a short-term low of $101.80 on January 6, 2023, as a result of numerous negative events. Tesla's epic decline may have culminated in a bottom around the $100 level. Tesla's stock price at $100 or lower, the shares are essentially a gift. Tesla could continue delivering 30 to 20% revenue growth for most of the next decade. So in this video, we're going to discuss why we believe Tesla can surprise us all on a good way in the coming days and months. Tesla can easily triple from here, and yet it appears cheap given its robust earnings and its demand pickup due to price reduction. So first, let's discuss the China factor. China is a critical market for Tesla. Fortunately, Tesla has the necessary ingredients to do great things in China. China's population is more than 4 times that of the US, with more than 500 million drivers. Moreover, China is exceptionally EV-friendly and has the most dynamic EV market globally. China sold 5.67 million EVs and plug-ins in 2022. More than 4 million vehicles were 100% EVs, more than 5 times the number of all EVs sold in the United States last year. Tesla is well positioned to capitalize on China's booming EV transition. The company's registrations surged last month. Tesla delivered more than 710,000 vehicles from its Shanghai factory in 2022. Tesla sales surged after the company dropped prices in China, illustrating another advantage due to Tesla's economies of scale and remarkably high profitability. Tesla remains the leader in innovation and technology in the EV segment, and it's akin to the iPhone of electric cars. Therefore, Tesla vehicles should continue garnering substantial demand in China and globally. China EV sales surged by 71% in November, with Tesla delivering a record 100,291 Chinese-made cars. Tesla's Model 3 and Y vehicles remain wildly popular in China and many other parts of the world. Tesla delivered 17,147 Models S/X vehicles, 9 of which were subject to leasing. Therefore, Tesla sold approximately 15,604 Model S/X vehicles last quarter. Using an ASP of $120,000 for Tesla's premium models, the company likely made $1.9 billion in revenues from Model S and X sales in Q4. It's noteworthy that during 2022, Tesla accounted for around 65% of total revenue associated with the EV industry, with Ford at around 7.6% and GM at 3.5%, far behind. In addition, although the Model Y at $52,990 is still priced at a premium to Ford's best-selling EV model, the Mach-E, it is priced below the firm's higher-end EV models. With respect to GM's EVs, the Model Y's base price is around $10,000 below that of the company's similarly sized EV SUV, the Cadillac Lyriq. Now let's consider growth in production capacity on the cards. On track towards the launch of an additional 10 to 12 factories over the next few years, Tesla has indicated plans to debut a new plant over the near term. Rumors suggest that the company's close to commitments in Indonesia. Considering that the country at 25% has among the largest deposits of nickel, a key component of battery packs used in Tesla, the development appears plausible. We anticipate that there's a compelling case for why Tesla could deliver 1.8 million to 2 million cars in 2023. Tesla is not as supply constrained, and production's starting to normalize, reducing the shortages experienced at the onset of the pandemic. TSLA's gaining share on pricing and new customer adoption, with market penetration at a low enough base, suggests a material vehicle opportunity. Elon Musk envisions the company becoming bigger than Apple and Saudi Aramco combined on a market capitalization basis in the future. He literally said that on Q3's 2020 earnings call, and then he never mentioned anything about it again on the Q4 2022 earnings call. If we combine Apple Inc., AAPL, at $2.25 trillion and Saudi Aramco at $1.94 trillion, it would combine to a $4.19 trillion market cap. At present, Tesla's market capitalization is $500 billion, which implies that his sales pitch this year is quite simple. The company will increase in value from $500 billion to $4.2 trillion in total market capitalization. On his path to $4.2 trillion, Musk has gone on to denounce every competitor by failing to even acknowledge that a distant number 2 even exists. Now, quoting specifically from an article, George Gianarikis from Canaccord Genuity asked Elon Musk, "I'm curious how you see the current competitive landscape changing over the next few years, and who do you see as your chief competitors 5 years from now?" Elon Musk responded with, "5 years is a long time. As with the Tesla order part AI team until late last night, and we're just asking guys like, so who do you think is close to Tesla with a general solution for self-driving? And we still don't even know who would even be a distant second." So yeah, it really seems like right now I don't think you could see a second place with a telescope. At least we can't. So that won't last forever. So in 5 years, I don't know, probably somebody's figured it out. I don't think it's any of the car companies that we're aware of. But I'm just guessing that someone might be right out eventually, so yeah. So, Apple shareholders and Tim Cook have to somehow acknowledge that Elon Musk and Tesla is going to eclipse them in value. But Elon Musk can't point out anyone else catching up to Tesla in his path to global dominance. The CEO is unwilling to admit outright what an analyst is suggesting indirectly as a means of reaching such a crazy goal. Now, keep in mind, both Apple and Aramco are likely to grow in value at the average S&P 500 index growth rate at a minimum, so not only does Tesla have to overshoot the $4.2 trillion number, but they also have to account for the growth rate of both companies. So if $4.2 trillion has a return rate of 12% over the next 10 years, Tesla Motors would need to reach a valuation of $13 trillion, assuming those two companies continue to grow in line with the S&P 500 average. Elon could decide to merge all of his companies into one giant superstructure. when we look at the validity of merging into a superstructure, we think it actually makes sense for a number of reasons. First, scale. Tesla's market opportunity in vehicles, though large, represents saturation risk at some point in the future. Number two, if Tesla goes conglomerate, it would compose a number of opportunities like social networking, payment technology, neurotechnology, space exploration, mining, space broadband, online auction marketplace, government computing contracts, and so forth. Number three, unique portfolio has substantial synergies due to founder and board level cooperation to ensure consolidation, as all the businesses are related to Elon Musk. Number four, space exploration extremely valuable, with SpaceX valued at $137 billion, and expansion into biotech is extremely valuable, with Neuralink representing more than a $10 billion market cap opportunity on medical device technologies. And finally, number five, the consolidated enterprise value could at some point compete with and exceed the combined value of Apple at Aramco, even though it would take an aggressive growth rate of 30% off the base of 9 or 10 different companies combined into a single entity. Time for the important announcement. Now you can join our community of 5,000 plus members and active stock market investors and receive the latest timely stock market and economy related updates, like what stocks to buy and what stocks to ignore or sell to save your portfolios. Economy and stock market related commentary and alerts are shared regularly on a weekly basis. You can also chat with me during market hours and ask me any questions.